Hello traders, Steve Ganz here with another in the Compare and Contrast series. So I did one a couple days ago, an earnings trade, and one of the people commented in there, how about a calendar versus something else? So I thought that's really a good idea. I like that. I'm not going to go deep into the workings of a calendar here because I can do a 3-hour course on that, and there's a lot to it. But suffice it to say that a calendar is a defined risk trade if both sides of the calendar are shut down at the time that the short strike, I say the short strike, the earlier dated strike expires. If you get out of the long strike at that same time, it's defined risk. If you don't get out of that long strike at the same time, you could certainly have one-sided risk, which you would not want in most cases unless you really understood what you were doing. So that said, with a calendar, let's do an optimize and see what we might trade against that. So Tesla has earnings that come out after the close tomorrow on Tuesday the 23rd, as I recall. So my goal here is going to be to put on these two trades, lock them down, and then on Wednesday morning when the market opens, I'm going to have both of them open side by side, and we're going to see how they react with whatever it is that Tesla happens to do after their earnings. So this is the calendar I'm doing at the money. Tesla's trading at $142. So a calendar, for those of you that aren't sure, I'm going to sell a 142. In this case, I'm doing a put calendar, and there's reasons why you might do a put, might do a call. Again, not going to get into that right now. But I'm going to sell that short strike for $675, and then I'm going to go buy the next long-dated strike, which is the following Friday, at that exact same price for $795. The difference between those two is $120, and that is my theoretical max loss on this trade. Again, assuming that I close this trade out this Friday, or excuse me, yes, by this Friday after Tesla announces their earnings. In other words, I don't want my 26 to expire and still have that long option for the following week, because then I would have total one-sided risk. So that's the calendar that I'm going to put on. So I'm going to go ahead, I'm going to save this trade, and we'll just call this Compare and Contrast. And we'll put that, I guess I don't have a compare and contrast category there. I probably need to make one. We'll just put it in the all category for right now. I'll save that trade, and I'm going to share that link in the description down below so that everybody, whether you have an optionstrat account or not at this point, you can simply click on that link and it will open in the free version of optionstrat for you to play with that and view that. Now, what do I want to match against that? What do I want to maybe compare that to? Well, I'm going to come over to optimize here. I'm going to say that I want a neutral trade. I'm going to have Tesla, I'm going to count on it being at 142. That's going to be my short strikes, if you will. Now I can look at what possibilities are out there. So this is going out and sorting through a whole bunch of different potential options trades. And it's showing me these are all defined risk trades. Excuse me. These top two are defined risk trades. These bottom two are not defined risk trades. They're naked options. Now, in order for this to be an actual comparison, because the calendar is a defined risk trade, I want to trade defined risk here too. So I want those two to be somewhat similar to each other. I also want it to expire on April 26th. Again, on the calendar, we would be closing that on Friday, April 26th, one way or another. So I want, even though one of those options goes the following Friday, I will be closing it this coming Friday. So I want to do the same here. I want this to expire on April 26th. So I'm going to go ahead and I'm going to do this one because it's defined risk trade. It's centered right at 142. I'm going to open that up in the builder, and we can see that in this case, this is the iron butterfly that this has set up. This is what it considers to be one of the best opportunities of a trade here. Now I can, of course, come in and I can play with this. I can make it wider, narrower, whatever I want to do on this. But for right now, I'm just going to go ahead and leave this in this configuration right here. So this is going to be, that's an 8-point wings. And you can see our break even on this is out here in the 136 range, something like that. Now, we can't really compare the break even here of 136, which will remain a solid break even. Can't really compare that to a break even on a calendar, and you're going to see why on Wednesday morning at the open. You're going to see what happens to the tent in a calendar. And it's pretty unusual, and you need to fully understand exactly what's happening there before you ever attempt to go in and trade a calendar. So I'm just going to go ahead, lock this trade down right here. And let's see, save trade. And this will also be compare and contrast. And we'll save that one and copy that link. And I will share both of these links, and we're already showing just an ever so slight amount of loss. Of course, that's just because of the bid-ask spread in these options, which is not a big deal, particularly as you're going into earnings. It can get a little bit crazy. Market moves around quite a bit. So if I were actually putting on this trade, again, I am not. These are paper trades for educational purposes. If I were actually going out there and making this trade, I would fish that order. I'd go out and I'd put out an order. I'd let it sit there for a little bit, see if I got a fill. If I didn't, I might let it sit a little longer, adjust my price up a little bit. But right here, the things that I want people to notice is this trade I put on for a debit. That is my max risk in the trade. My max profit is a potential 519. I'm not going to shoot for that. That would mean essentially that I would have to peg this at expiration at 142. That is highly unlikely to happen. But this is a good measure of reward to risk. And then I look at the same thing here. So my max loss, in this case, I took in a credit of $635, but I have a max loss of $165. My max profit, $635. So you can see it's a little bit more max loss, a little bit more risk associated with this trade. Also a little bit more potential profit associated with this trade. So again, a good reward to risk ratio. Now this shows the break-evens, but I'm going to tell you again, in a calendar, we can't really count on that. And we also can't really count on the percent chance of profit. In a butterfly trade, a condor trade, something that is not a calendar style trade, this number is a pretty good number to work from. In this particular case, I would say that this is not accurate, and it's not a fault of the software platform. I want to confirm that. It's a way that options modeling works. Again, we have two different expirations here. And based on those two different expirations, and based on the fact that right now our break-evens look like they're all the way out at 128 and maybe up here at 160, if those were going to be our true break-evens, this would be a likely number to go with. But what you're going to see on Wednesday is something that's really going to open your eyes on calendars, and you're going to see how this calendar changes and how it, quite frankly, shrinks up quite a bit. When that shrink happens, you're going to see a much more realistic chance of profit. So in a calendar, I would urge you not to look at this thinking that is, in fact, a realistic chance of profit, because options modeling just doesn't accommodate the two different expirations real well when you're talking two different time expirations, two different date expirations. So that's going to be it for setting up this trade. I've got both of these saved. Again, I'm going to share the link down below. Ask a favor of you. Again, whether you have optionstrat or not, you can click on those links and it will open a free version for you so that you can take a look at these and model these. You can watch these yourself. You can change them if you want. You can go in and modify the trade. Maybe you want a wider spread, or maybe you want your calendar at different strikes. Maybe you think Tesla's going to rip up, so you want to put your short strikes maybe at 150. All of those are things that you can do, again, in the free version. So play with that. And the second thing I'd like to ask of you, if you like this sort of content, please give me a comment down below. Give me some ideas. We're getting into earnings season here. If there's certain things that you've always wondered about, how does this trade compare to that trade? Let me know. I'm always looking for ideas of things to share and help educate options traders. So that's it for now. Thanks so much, everyone. Take care.